I wonder, in the years that you've been kind of following markets and seeing cycles, not just here in the U.S., but around the world, emerging markets, developed ones, do you feel as though there's a sense of a bottom building right now, or could things get a lot worse?
I think things could get a lot worse. And the main problem, of course, is the cryptocurrencies. This is a very unique situation where billions and billions of dollars have been put into cryptocurrencies. And now it's a tail wagging the dog. As you could see, Bitcoin goes down, the S&P 500 goes down. So it's a very, very unusual situation. And you've got millions, if not billions of people following these cryptocurrencies. So it has a big psychological impact.
So that psychological impact is interesting that you bring up, because we've talked about this notion over the past few years, 3 to 4 years, where cryptocurrencies, specifically Bitcoin prices and markets, have been at times either fairly tightly correlated or very loosely correlated to the markets overall. As of late, before the recent sell-off in the last couple of weeks, they were starting to lose a little bit of that correlation, but now they're coming back again. Do you feel as though it's cryptocurrencies that really are driving the action? It doesn't seem like it can reconcile with the way that we look at fundamentals in this market.
I really do. I think there is that correlation. It's really interesting when you see the Bitcoin going down, the S&P gap down. That's an unusual kind of behavior. It didn't just go down gradually, it just gapped down. That means there was panic in the market. So I think it's a very high correlation.
If there are gaps, like you say, if there are kind of these dislocations that are developing, it doesn't just have to be these cryptocurrencies versus the market. There are gaps happening all over the place. What do you feel as though are the most compelling opportunities, these dislocations that are being created right now? Are there places where investors and traders should be looking for opportunities more so than others?
I think it's time to start looking at China. I know that China has performed very badly recently, but the Chinese government's lowering interest rates, not raising interest rates like they're doing in the U.S., and they're trying to pump up the economy so that it performs better. And we've reached a real bottom in the Chinese market. So that's one place to look, I would say. In addition, the Indian market, because they're very rapidly going through a transformation as a result of technology. So very interesting thing happening there.
Does it bother you at all? Does it give you pause, Mark, this idea that the Chinese government can be so heavy-handed one way or the other, either in propping things up or knocking them down? They've shown both sides of that particular coin over the course of the last 3 or 4 years. I mean, a lot of bulls in China got crushed because of the regulatory concerns there. Do you think that they've learned their lesson, the Chinese Communist Party and the government there?
I don't think they've necessarily learned their lesson. They're still going to try to control the economy. But the bottom line is now they reverse course because they realize that it's gone too far and they have to lighten up on the regulations. And if you look at the number of new regulations coming out, the number has declined dramatically recently in the last 12 months. So I think they definitely got the message they've got to change tack. And, in China, you got to look at what the government is doing because they're the ones that are going to eventually control the market. And we have to be concerned about what moves they are going to make.
Now, the dollar has also been a huge topic for discussion, multi-decade highs on a relative basis to many other countries in terms of the currency. Emerging markets, I mean, the conventional wisdom is they don't do well when the dollar is this strong. Do you see that dollar strength going away anytime soon, especially with the interest rate hike path that the Fed is anticipated to make in the coming months and years?
No, I don't think the dollar strength is going away. And as you rightly pointed out, emerging markets get hit because all their currencies, almost without exception, a few exceptions, their currencies really get hit. Of course, the Chinese renminbi has been fairly steady. It's weakened against the dollar, but they are pretty much in control of that. And there are a few other currencies around the world in emerging markets that are doing fairly well. But generally speaking, the dollar is going to get stronger, and that'll not be good for a lot of emerging markets.
And Mark, before we let you go, the Federal Reserve and Fed Chair Jerome Powell, they have a formidable task in front of them. Do you, in your mind, have confidence in the Federal Reserve in being able to manage this as best they can to engineer a, so to speak, soft landing for the U.S. economy?
I have confidence that they're going to follow their rule book, and you know what that is. If inflation is 8.5%, 9%, that means interest rates are going to go up to 8.5%, 9% because their rule book tells them they've got to make interest rates higher than inflation. So, I mean, they've made this mess with printing of money the way they did. Now it's going to be very difficult for them to get out of it. And we're going to be going through a lot of crises in the following months.